thank you very much for waiting and for joining us today for our live webinar, Cyber Predictions 2026, What's Coming Next for Reinsurance. I'm Yvette Hessen, Head of Communications and Market Engagement at CyberCube, and I'm moderating today's live session. Each year, CyberCube publishes its Cyber Predictions report, identifying the key forces shaping the cyber risk landscape over the year ahead. The 2026 report comes at a particularly important moment for our industry, one marked by rapidly evolving threat actors, accelerating technology change, and continued pressure on growth and profitability across the reinsurance market. Today's webinar brings together CyberCube experts and industry leaders to unpack the key insights from the 2026 report. I'm delighted to be joined by an outstanding panel today, and I'll ask everybody to briefly introduce themselves. Chris, can you tell us a little bit about your role?
Yeah, thank you. Yes, I'm Chris Jones. I'm the Chief Exec of the International Underwriting Association, trade association for insurers, for the company market insurers based here in London.
Brilliant. And on the line, you have John Huff, the President and CEO of the Association of Bermuda Insurers and Reinsurers. Can you tell us a little bit about your role?
Yes, hello, John Huff with the Association of Bermuda Insurers and Reinsurers. ABIR is our acronym. I'm also a former state insurance commissioner from the state of Missouri, and I was also president of the National Association of Insurance Commissioners.
Great. Also joining us remotely is Brittany in New York from CyberCube. Brittany, over to you.
Hi, everyone. I am CyberCube's Head of Solution Consulting and ILS, and I am an actuary. Excited to be here today.
And in studio, Simon Edward.
Hello, everyone. I'm Simon. I'm the CEO and founder of a security testing lab, and I'll talk to you a bit more about that in a minute.
Great. So thanks for those introductions. This is a live and interactive session. We'll be running polls throughout the discussion, and you'll have opportunities to submit questions for our panelists. We have had over 700 people registered for today's event, so I look forward to taking the time with you today. With that, let's get started, and that will be with a presentation giving an overview of what Simon predicts will happen in 2026.
Yes, this will all definitely happen. So thank you for joining us. Just so that I can explain why my prediction might be useful, I want to take just a couple of minutes to talk about who I am and the company that I operate. So SE Labs, we test security products and services. One of the benefits of the way we operate is we don't really have any skin in the game. We don't sell security products. So if you want to understand whether your own business or even your customers' businesses are being protected sufficiently, we can help provide some of the pieces to that puzzle in an unbiased way. I used to be a journalist like Yvette here, and I built the first real-world testing lab for antivirus many years ago, and it's only progressed from there to more advanced attacks. So the things that we all care about today with the issues that we're seeing globally. The types of people that we work with, we can work with insurance companies, but generally speaking, we work with global 500 businesses that really need to make sure they're protecting themselves and their customers properly. And we also work with the companies that make the cybersecurity software. So, Microsoft, Cisco, all of those really big organizations, and then down from there. What separates us from any other tester is that we test literally the same way that the hackers operate. We test like hackers, which means that the results that we produce are potentially very useful. They're not synthetic, they're real. And that gives you a sense of how well will this product or this combination of products actually work in the real world against real attackers. For us to be able to do that, we have to know how the bad guys are operating. So I have to track the tradecraft of the attackers. And because we do it that way, we're trusted by all these companies that make the software and all these companies that buy the software. Here's a quick snapshot of just a few of our customers. So my main prediction will sound boring and like I'm trying to be funny to begin with, but nothing much will change, by which I mean, if you're a cyber attacker today, there's very little incentive for you to change your behavior from the last 10 or even 15 years. Even the concept of ransomware, which we'll go into in a little bit, that has been going on since the days of modems. It's not really a new concept. It's a way of taking money off people. And that's what criminals generally like to do. So my prediction is they will continue to do what they do until someone stops them doing it. Now, the way security vendors would say the way to stop them is to produce more products, which they will happily sell to you. And I think if we look at the headlines over the last 5 to 10 years, we can see, in general, that hasn't really worked because we're seeing very high-profile hacks from companies who really you would expect to be the best protected. So buyers have no choice really but to buy these products and then potentially buy insurance as well to help themselves out. But I kind of feel sorry for the insurers as well. I don't know really how you insure against cybersecurity attacks or cyber attacks. You need a lot of telemetry in general, even just to insure chips and things like that. So with cybersecurity, which is a kind of asymmetric warfare situation, it'll be really interesting to hear what these guys have to say about that. In relation to my original predictions, I also think that small businesses will be a massive opportunity for insurers and a massive liability to our kind of industry, our economies, because they're hugely exposed for various reasons I'll go into in a second. I think people will still be talking about ransomware attacks, probably for the next 10 years. And I think the most boring stepchild of all of these issues is cyber hygiene. And I think that's actually the solution. And I think no one really talks about it outside of special CISO conferences where business people get together and try and work out how they should fix the problems. Now, with the small businesses, there's not very much incentive for a small business to adopt one of the very few security standards that exist. So in the UK, we have Cyber Essentials, and that's a bit like an ISO 27001 miniature version. It's kind of like do we have some policies? Do we make sure that our passwords are varied and secure? But if you're a small company, you might not believe you have the budget to do this. And the original concept was if you had these badges, other companies would want to work with you. And that's true at the higher levels. My company has to have 27001, or Microsoft and McAfee and all those guys just simply won't work with me. But when you come lower down, it becomes less of an obvious choice. And then when it comes to buying the products to protect their businesses, and everyone always talks about the supply chain as being an issue, well, I feel sorry for the little guys because they can't afford the products. They won't even be allowed to buy them because a lot of these security companies will only sell them 200 seats or more. And so if you're 20 people, you simply won't have the ability to buy the products. And when it comes to insurance, and I'll happily go into this as we all debate this, getting meaningful cyber insurance if you're a small company is not even possible. Even if I had the money for it, the companies won't insure me simply because of the nature of the work that I do. And I suspect the same for many other small businesses as well. So SMEs can't afford the products, they don't build the policies, and they can't insure themselves out of trouble, which is super bad news. Now, cyber hygiene, which is the boring bit, is simply a case of businesses having a plan. I mean, that's the most basic way I can put it. And we know from the statistics that in the US and in the UK, two countries you would think would be leading the way, only 50% of organizations have a plan. And I don't just mean the really small organizations, I mean really, really big ones. It beggars belief they don't have a cybersecurity plan. So this all means that ransomware is a significant threat because ransomware is not a full attack, but it only works if it's got a way in. So to use a technical term, it's a payload. If I want to hack your organization, ransomware is my ultimate mission. I want to deploy that on your systems. But I can't just walk up and put it on your computer, and I probably just won't email you directly to download a file and run it. I'm going to penetrate your network and I'm going to put it in the most appropriate places. It happens at the end of the attack, and that attack should fail if good cyber hygiene is followed. Poor cyber hygiene takes us to the ransomware stage very quickly and very easily, and I would bet money, if it could ever be proved, that in the big high-profile attacks that we've seen where ransomware has been the payload, that some basic mistakes have been made along the way. No one's done anything very clever to get it onto that system, I would bet. The reason that we hear about ransomware a lot is it's ever so popular with two different groups of people. It's popular with the attackers, and it's popular in some ways, in special ways, with the victims because it's easy to understand. So as a criminal, I would like to use ransomware because I can instantly monetize my attacks. And as a victim, as a board member, I can understand that the consequence of this attack has got a very specific dollar or pound sign next to it. $1 million, $5 million, whatever it is, I can understand the damage to my business. And I know how much money I'm losing if my business is frozen because systems aren't working anymore. So I can understand that. And if people are asking me for budget to protect against this kind of threat, I can easily come up with a figure and say, sure, I have $10 million a year. It's less easy to understand how much other types of breaches cost. So if the breach involves quietly stealing information, IP, sending it off to other countries, that's harder for us to put a figure on. And so people get a bit more nervous about allocating budget for that. But ransomware is a super clear thing. Everyone can understand it. Criminals love it. And we're going to be hearing about it for at least a decade longer. So I've got some questions for the insurers because I know about cybersecurity, but I don't know about your industry. Can you improve your odds when you're creating products by selecting customers who have demonstrated good cyber hygiene? Are they a better bet if they can prove that they're taking cybersecurity seriously? And how do you assess that? Do you look at the products they've chosen, the certifications that they've gained perhaps, or even just that they've managed to go 5 years without being breached? And can you produce meaningful insurance? I was talking to Chris before we started this webinar, and I just said off the top of my head, I'm not even sure how you would insure for cyber security in a meaningful way, because it's not like a predictable situation where accidents happen. These are criminals who they're probably not going to get caught very often. It really requires state-level police cooperation to identify and capture them. The bar for committing an online crime is very low. The risk of being caught is very low. So how does that work in terms of insurance? And I think that's where I'm going to leave it now because I know we're super pushed for time. But obviously, questions at the end, just send them through.
Brilliant. And a great place to start. Lots of questions there. I'm hoping our panelists can help answer some of those. We do have a lot of questions. We've had a lot of pre-submitted questions as well. So I'll be trying to race through as many of those as possible. I guess with this outlook that's been set, I'm going to start with you, Simon, here in studio, in response to Simon here in studio. Chris, can you tell me, what do you think about those predictions that Simon's made? Do you agree with them?
I agree with most of them. So I would make a couple of comments. There's certainly enough cyber insurers trying to write the business, so we've got ample capacity. But if I pick up on a couple of points, so the data, insurers craving data for cybersecurity, absolutely 100% correct. We talk a lot about pricing, we talk a lot about attachment points, but that risk assessment, that risk data is absolutely crucial, particularly in the environment of chronic underreported cyber incidents. That evolving risk landscape, which we see more and more of, and actually, and this is a good comparison with other classes of insurance, the lack of standardized databases, industry databases. If I want to have a marine risk, I can go to a database, see the vessel, see its history, see what's happened, and then so on in that kind of physical way. Cyber doesn't seem to have that, and maybe that's because it's a nascent industry. Second point, absolutely on SMEs, agree with that, but I would make a wider point for the larger businesses as well. If you look at certainly the UK market, I can't speak for US and Bermuda, but for the UK market, I think half of the FTSE 100, only half, have cyber insurance in London. Widen that out to FTSE 250, and it's less than 20%. There's a huge, and if you look at the 3 or 4 major incidents, JLR, M&S, Co-op, Harrods last year, all large companies, 3 of those companies did not have cyber insurance at all. I think M&S had 100 million, which is seriously insignificant to the actual losses. The final point was, and I would respectfully push back on the impractical nature and whether the product's any good. And simply to say that I do think there's a lot more we can do as a cyber insurance industry to showcase the value of the product, simplify the product, have common wordings, common risk factors, make that onboarding for SMEs an easier process. So I think to sort of conclude, I agree with most of it. I'd push back a little bit on some of it.
John, what about you? Do you have any pushbacks, or do you agree with everything there?
Well, probably not with everything or the way it was articulated, but I will say an overall general statement is the market is looking for stability, and the market is getting more stable, and that's probably the big 2026 prediction. If you look at this journey we've been on from going from significant silent cyber risks to standalone cyber, and articulating the risks that are covered, and this interesting product nature that is not an indemnification product per se that the insurance industry is so familiar with, but more of a protection product. I think that leads much of the discussion. I do want to highlight 3 reports, and this is such a timely webinar event. Let me thank CyberCube for hosting us, because just in the last 2 weeks, we've had significant cyber reports that had been released. And I just want to shout out the 3 significant ones that I really took some time to look at, and I encourage others to as well. The Bermuda Monetary Authority, so BMA.BN, just released their December 2025 report on the cyber market. You'll see there that in this global market, about $11 billion of gross written premium goes through Bermuda, so a significant player here. And I would say Bermuda is leading the way here with competence, meaning talent, capital, and capacity in the cyberspace. The second report is Gallagher just released a report, I think earlier this week, on some of its predictions for cyber. And then thirdly, Axis Specialty, a significant Bermuda player in the insurance reinsurance space, just released a survey yesterday, which I think hit on some of the points that were just raised. Is depending on what share you're in, you're viewing the position of the market a little differently and what you think the risks and opportunities are.
Great, and thanks for outlining those numbers from the BMA report and those reports to look at. Brittany, can I turn to you finally and see what you think about Simon's predictions?
Yeah, I think he touched on some themes that we're all thinking about, how to evaluate the cyber hygiene of companies and how that needs to change, whether you're looking at a small micro company or a very, very large company. I think that is something across the industry that we get better at each year. And it also changes. So as the threat landscape changes, as the different types of threat actors are more active or using different techniques, those signals and the hygiene that matter will change over time. And so that's where we're going as an industry, is to make sure we're always looking ahead and have those correct signals. But it's absolutely something at the top of our minds. It's obviously something that CyberCube is thinking about all throughout the year. So for SMEs, making sure we understand what their networks look like and what the appropriate cyber hygiene is, because what I definitely agree with was that they'll have different capabilities, they'll have different types of networks, and they'll be able to only get certain cyber hygiene or partners in place. And we need to acknowledge that and take that into the underwriting and the modeling. So I thought that was very pertinent. And then I think, not to kind of front run ourselves, but the last piece will be just looking ahead and seeing how AI impacts the threat landscape. I think if you exclude AI, we kind of do have a pretty good grasp of how things go year to year. You don't see huge shifts in frequency trends, for example. You definitely see shifts, but it's not, a tenfold shift over time, as I think some people who don't do this day to day like to imagine that there are, because of the man-made nature of it.
Great. I will definitely touch on some of those trends, SMEs, AI as well. But one thing John did talk about was the BMA stats with that 11 billion figure on capacity. Chris, you've also published some research of some numbers. Maybe you could tell me a little bit about the IUA stats that you've been putting out on cyber.
Yeah. So just to remind, we represent the company market here in London, so not including the Lloyd's figures and our members, and this only concerns business written in London. So our numbers for last year were just almost £1.2 billion, which is slightly dwarfed by John's Bermuda number, but it's not a competition. If you look at the Lloyd's market as well, and you add all of that, I will guess the overall EU market share is probably around 25%. with the US or North America, 60-70%. So we were to, I suppose one thing it does do is show the opportunities for growth.
And is that through SMEs or what is that through?
Certainly, yeah. If you look at the take-up of cyber for SMEs in the UK, it's about 15%, if I understand it correctly. Huge, and Simon touched upon some of the reasons why SMEs don't buy cyber: cost, complexity. Do they understand what they're buying? Do they think they're too small that they need insurance? And all of those things, I think we need to do more. As I said in my opening comments, we need to do more to make the case for cyber insurance. If you look at the severity of of losses last year in the UK, it's tripled. If you look at the ABI figures. So absolutely, there's more we can do across the board, but SMEs is a real start point, yes.
Okay. And that's a classic line of why would I bother with insurance? Why would the attackers bother with me? Because I haven't got much or enough to be bothered with. But the problem is the resources needed to do an attack is so easy. Why not? And you can scale it. You can attack hundreds of people in one go rather than, I'm not just going to break into everyone's van and steal their tools. That wouldn't be practical. But with cyber, it makes it a lot easier.
Staying with that growth element, Brittany, we've projected growth as well for this market. Perhaps you could talk through some of our predictions?
Sure. So CyberCube looked at this a bit differently than John and Chris were. And so instead of predicting the growth rate, we looked at a range. We looked at the US market and a range of 3 different compound annual growth rates between 10 and 30%. And then what we did is we looked at the capital allocation that would be needed to enable this growth potential. And I think in order to hit within that range over the next 10 years, where we sit right now as an industry with a soft rate environment, particularly in the more established areas of the market, what we'd also need to see is that significant growth in things that are underpenetrated, like the SME in the established markets or emerging areas kind of across the chain of company sizes. So from SME all the way to the large corporates that are sitting in some of those countries and regulatory areas that have even lower penetration than we'd see in, Bermuda, UK, US markets today.
Great. So projections still, generally, there's a feeling of market growth. But what are we actually seeing now? We just had the important 1/1 renewal season. So I'm going to ask John to give a little bit of an overview about what he's seen in regards of renewal seasons, what's shaping the market trends at the moment now.
So when I talked to our underwriters, we saw a softening 1/1 renewal in cyber. So rates were softening with some exceptions, by the way. Healthcare, which is, of course, a significant growing trend for employment in the U.S. In fact, it was just a recent report that said that's where the job growth will come in the U.S. You're seeing increased rates in higher single digits in the healthcare space on cyber. We've always known that's an area of focus. But kind of going back to the growth projections, probably the most interesting estimate was Gallagher's estimate that they thought that this market may double by 2030. So maybe as high as in the $30 billion range of premium. So there is a lot of optimism in the market, but you saw a softening of rate for 1/1.
So, Chris, John is predicting great growth potential, still doubling of market potentially, but soft market conditions at the renewals. What have you found in London at the 1/1s?
Similar, I guess, or maybe I hope that the market's bottoming out to some extent. It will be interesting to see on the primary level, on the primary layers, the extent to which the recent cyber incidents in the UK sort of move the needle. If we look at reinsurance, quota shares as flat to a couple of percent increases, but on that cat excess of loss, cat-free excess of loss, there's still significant decreases in premium. Ample capacity, as I mentioned before, and that's not only new capacity coming into the market, but existing carriers trying to expand it in growth. So it's still challenging. It's very much geographically based as well. We see more reductions in Europe, Latin America, UK compared to North America, I would say. quite often industry specific as well. But I think we're starting to see a bottoming out of the market, and hopefully onto a better trajectory is maybe the best way to put it.
Fingers crossed. One thing that comes up often in a soft market or a challenging market is the need to be innovative by market participants. And that is something that Brittany has predicted in our predictions report. So, Brittany, I'm going to ask you to explain what you mean by that precisely.
Yeah, I think we've all kind of touched a little bit on it today already as well. So in the soft rate environment, you're going to see different market participants trying to either maybe still grow or protect kind of the market share they have. And you need to do that in some way other than price. We saw a few different things already happening in 2025. We saw innovation, particularly around new types of reinsurance structures. So we saw Chubb with the first aggregate cyber cat bond, Beasley opening a new Bermuda facility focused on cyber ILS this year, Aon creating a new reinsurance structure covering cluster campaigns. And those are events that are individually targeted events, but they're happening due to the same specific vulnerability in a short amount of time. At CyberCube, we released a first of its kind exposure management platform to look at cyber hygiene on a portfolio-wide basis. So one of the things that Simon talked about earlier, how can you look at cyber hygiene? And it's hard enough at the individual company level, but then how are you trying to look across an entire portfolio or an entire treaty? That's what we're trying to help folks do as they look ahead into 2026. And I think we'll see new ways of reaching the SME and emerging markets. I think Chris already called out some of those themes: simplification, really structured ways of having that policy wording be aligned across products, across companies. So we'll kind of see what's in store, but those are some of the themes that we saw from 2025 that'll continue into the new year.
John, I see you nodding there. Maybe you want to talk a little bit about the innovation there with regards to ILS and cyber hygiene?
Yeah, absolutely. So I think we've never seen a period of time where there's incredible sophistication by underwriters and brokers in this space. So what you're seeing is the ability to innovate and using the risk transfer products that we use for Nat Cat and other uses to potentially use that in the ILS space. Brittany referenced the cat bond model, the ILS model, which is taken off at several different companies and some real growth in Bermuda. But you just saw the Bermuda Monetary Authority release a proposal earlier this week on the potential for parametric coverage, which you immediately think of Nat Cat space for parametric, but they also reference potentially using a parametric cover in the cyberspace. To echo Chris's comments, there's a lot of capital in the market. There's capacity available. There's plenty in this cyberspace. I think that's what's attribute to some of the softening on rate. But you'll see this fine tuning, if you will, on the underwriting process because of this sophistication, where folks will really be able to drill down on individual products and individual seeding companies on the reinsured space. The improvement for cyber hygiene, I kind of view this as the gift that the insurance industry, insurance and reinsurance sector, they give the entire society by increasing cyber hygiene. I'll just give you a fast example. My little trade association that I help manage here in Bermuda, our cyber hygiene is better because we have cyber coverage. We had to jump through the hoops like multi-factor authentication and other steps to make sure we were prepared, and we would not have been considered by a carrier for a cyber insurance, but for jumping through those hoops, and that's helpful for the entire market.
Great. I do want to turn back to Chris here. A lot of talk about cyber hygiene, Cyber Essentials, the UK government-backed certification scheme that does help organisations. How important are these initiatives for the insurance community?
I would say, so start point, Cyber Essentials, it's an excellent risk signpost for insurers. It has certainly played an important role for UK business, and it's a big but, it's very rarely taken up by SMEs. I think the percentage is about 7%. And some of that is cost. I think some of it, we talked about the SME challenges about purchasing cyber cover. Also, a certification scheme, I think, doesn't lend itself naturally to a very fast-moving risk environment. Also, there's the question of, well, certification is great up front, but at the back end, when something's gone wrong, it doesn't help anyone to recover their business. So I think it's been valuable, but I think there's more that we need to do as industry and government in raising awareness, providing more of that advice and guidance up front, and then looking at some of the back end where it can help. So I think it's been valuable, but I think it needs to be in parallel with a lot of other measures.
Great. Now, thank you to our panelists for answering my questions. We have got loads and loads and loads of questions here from the audience. So I'm going to fire through these. So I'm going to ask my panelists to be on standby to go through these. I did say we were going to speak about AI, so I'm going to ask some questions here. Simon, let's start with you. What new factors, AI for example, will be important going forward for the market?
Well, there's two different bits to that. The first one is, what have the bad guys been using AI for successfully for the last couple of years? And the answer is spelling and grammar. So if you look at phishing emails and other email threats like that, they're often usually easily spotted because of poor grammar and poor spelling. This claims to be from Microsoft, but it's just wrong. And now what they're doing is using ChatGPT and other AI LLMs to generate much more convincing phishing and other emails. So that is a practical benefit to the attackers, and it's a problem for us as the potential victims. What the cybersecurity world is starting to talk about and trying to hype up, which is not correct, is that they will be using AI to write new versions of ransomware and other malware threats to develop more, sophisticated attacks. And it's not appropriate. It doesn't work that way. It doesn't work. So the truth is basic stuff like spelling, and the fiction is all sorts of clever sort of Skynet type advanced stuff. It might happen, but I don't think for ages yet. Computers can't code as well as humans.
Great. Another AI question. I'm going to throw this one to Chris first and then to John. Someone has said, we'd love to know about how the insurance ecosystem is going to respond to these AI-driven attacks in the next couple of years. Is it going to fall under the scope of coverage, or is it going to become another standard solution like war or terrorism? Chris, over to you.
It's an interesting question, and one we get asked. That's the question we get asked more than almost any other. I think, to be frank, the market's still exploring where AI liability will reside, and I'm not just talking here about a cyber policy or a standalone AI policy. I'm talking here about traditional policies, all of whom will be providing some form of AI cover as part of their services. So there's issues around what constitutes an AI incident. It's okay. I guess it's more simplistic if you look at something like a deep fake, but if you're talking about, data analysis, decision-making processes, and as I said before, where does that liability actually reside? Should it be a traditional policy? Is it just magnifying a traditional risk, or is it a standalone risk that should be a separate market away from the cyber market, away from the traditional insurance market? Or a blend of both? I think there's a lot of open questions there, and actually a lot of new risks. We talk about things, but then if you look at it from a third-party liability perspective, if I'm receiving financial advice, it shouldn't matter to me whether it comes from an AI bot or it comes from a person giving that advice. If it's negligent advice, a professional indemnity policy should respond. So I think we've got to manage the risk rather than thinking about excluding it or limiting in certain circumstances. There's a different question around state-sponsored and malicious activity, but I think we start off by saying, let's manage the risk.
John, what do you think?
Yeah, I think that's what the 2026 prediction is. You're going to see this action to clarify, and AI is the best example. That AI knife cuts both ways. It will. Many people think it will help defend from cyber attacks by improving defenses, and others think it's just going to help the bad guys for those cyber attacks. So the real mission for the industry will be to clarify what's covered and what's not covered. And by the way, I agree with Chris. This is not to start excluding things, but trying to understand with this great talent we have in the field to clarify what coverage is going to apply when. And you saw this moving away from silent cyber, where perhaps the premium dollars were hidden or opaque. And you saw that now we're going to stand alone, and we probably need more clarity in the market there. And by the way, there may be other types of coverage impacted here. Is there a media coverage a play here as well? So that there's quite a bit of work there to do there for clarification.
Great. Brittany, I'm going to come to you. I've had some questions here about products. How are you looking, so I'm presuming that CyberCube, to integrate technographic insights into your platforms going forward?
Yeah, so I'd say we already have technographic information across our platform. So if you think about technographic information as far as different types of security hygiene signals, those are things that we are surfacing for underwriters as they look to make risk selection decisions. That's data that is flowing through our financial loss modeling to adjust the outcomes based on that cybersecurity hygiene. We're also looking at the digital supply chain. So how does a company use third-party technology? Who are they dependent upon? Again, we are surfacing that agnostic to loss modeling so that folks can see their exposures and concentrations where they might be out of step with the overall market, either on purpose or on accident. And then using that as well in our systemic loss modeling to show what is the potential footprint of an event that is due to a specific technology going down or facing any kind of cyber incident. So already very deeply embedded in CyberCube's platform. It's part of our original DNA. And then looking forward, we want to see how is that going to change. So some things will change in how companies are using technologies, new technologies coming to the forefront. So AI, I think Chris and John did a really good job of kind of cutting up into different pieces, the big amorphous AI. One of those questions is, are there new AI-specific single points of failure that we need to be modeling? And so that's a technographic question that we'll have. And so that's certainly something we're thinking about this year, looking at single points of failure and the digital supply chain and being able to curate watch lists and kind of recognizing when certain types of technology are under further scrutiny than maybe they have been in the past. And insurance companies and carriers want to know where that increased risk sits or where they might expect an increased frequency of events. Anything we can do to help the industry and the market be forward-facing and not just reactive to what happened last year.
Great. And another one, Brittany, I'm going to ask you to respond to quickly. One of the biggest issues with benchmarking is the ability to do a more granular comparison for a specific industry size and or revenue size. Can you please speak to how this has been looked at and if any improvements are expected moving forward?
Yeah, so this is a bit of a data, I'd say, conundrum maybe. I think it was Chris earlier who spoke about, in other traditional lines, you can go to a big database that kind of most people share and look up different exposures or what have you. At CyberCube, we have our industry exposure database. It is global as of over a year ago. And so we're able to show the breakdown of the industry at exposures across individual countries and regulatory areas. And as the market grows and as more reporting is required, we'll be able to break that down even further. So we have an economist on staff whose job is really to help us find any and all data sources that we can, even if it's outside of the traditional avenues, to be able to get as granular as possible.
Great. We've had quite a few questions on the market trends. I'm going to start here with Simon, and then Chris and John. Maybe we have enough time. Will geopolitical tensions compound cyber attacks, and will cyber risk move closer to becoming non-insurable? That would be.
I think what geopolitical situations will do will mean that people will attribute cyber events differently. It's impossible for anyone to really know who's attacked who. And if country A is now deeply unpopular because it's invading loads of different places, there's a high chance it's going to be blamed for a lot of the bad things that are happening. If you think back to a few years ago, the two main competitors against the West were China and Russia. And China was getting blamed for an awful lot of hacking because in the UK and in the US, there's a big commercial competition going on. And now we're hearing that Russia's responsible for an awful lot of attacks. I'm sure it's true in both cases, but how the media is choosing to report it and how the experts within the governmental organizations that track these things decide to focus their attention, I suspect, will be more about political means rather than the actual truth of are 10% of threats coming from Syria, are 20% coming from Taiwan, that kind of thing.
Well, it will and does compound cyber risk in the same way that geopolitical tensions do the same for other classes of business. We see it across the board. Pretty much all of the classes of business that our members drive will be impacted in one way, shape, or form with geopolitical risk. I don't think it necessarily moves towards being uninsurable. Obviously, there will be discussions around what we would consider state-sponsored cyber attacks, terrorism, and whether there should be policy triggers and different levels of policy response to those is a moot point. But certainly, when you look at supply chain risk, I'm talking about supply chain in the physical sense of transporting goods, absolutely open to cyber attack. So yes, it's certainly compounding.
John.
Just briefly, I would say, remember, we're the only industry that sells a product and we don't know what it will cost until it's over. So the geopolitical risk, geopolitical tensions can really change a variety of different product lines. And it's something our industry has always been following. They've always followed very carefully and take into account in the next cycle. But it's now, we probably never had a more heightened period of geopolitical risk than we do today.
Good question here on the reinsurance market. What factors are expected to drive capacity from the UK and Bermuda markets? Are there any state-specific factors? Example, California. We mentioned Bermuda there. So, John, that's one for you.
So the capacity has been driven by new entrants, but also just a commitment to the product line. So I don't know that we see California as a major driver of risk or adding new capital and capacity. But as Chris said earlier, there's plenty of capital in the market. If there was an area that I would be now focused on, because we talked about the risk here in the market, but we haven't talked about rate adequacy. And so I think that's something that will be open for debate this year. As we look into future underwriting, are these products that are being offered, is there a rate adequacy point that needs to be examined by the carriers?
Great. We are running out of time for questions, but as this is a predictions webinar, just to wrap up and finish, and I know you made quite a few predictions as well, Sam, based on the conversations we've had today as well, reflecting on those. If I could ask you to briefly summarize in about a minute, what do you think will happen in 2026? And if so, if that happens, how should your members, in particular, John, Chris, how should your members respond to that prediction you make? So, Simon, I know you talked briefly.
I hope that cyber insurance will become more available to smaller organizations. I predict there will be a breach of a big organization in Greenland, and I predict that I will not say who I predict will be blamed for that.
Fantastic.
I think looking at what I'd like to see is a more serious discussion around the cyber protection gap, and that would encompass cyber take-up, what level of liability cyber insurers can actually provide. We've seen the JLR is a great example where that is a risk that was uninsured, but could very easily have been insured in the market. And it's even though it's a large event, it's something that we should be doing. And fortunately, from the UK point of view, there is quite a lot of work going on. So the London Market Group here in London, we're members of, and Lloyd's and the brokers has submitted a white paper to government on how we might take forward some of the suggestions to improve take-up, and also look at some of that aggregation risk. The FCA have also now started to look at cyber from a consumer element. And there's been calls within Parliament on looking at potentially extending pool re to cover off some of the really extreme risks that we've seen. But I think so there's an awful lot going on, but we need to have that proper discussion about what's available in the market and where any public-private partnership should work.
Thank you. John?
I think you will see this move toward maybe dissecting the risk between more mainstream risk and the severe risk. We'll see it from the supervisors already, the stress testing that the Bermuda Monetary Authority is doing on the companies for these truly systemic cyber risk. And that will have a more beneficial outcome for consumers because there'll be more product available. You see the healthiest reinsurance market in cyber today than ever. And so you'll probably see growth in that space, particularly as you change from more quota shares to excess of loss, again, on this trend of defining the risk.
Fantastic. Brittany, you did make your prediction on innovation, which people can read in our report. You can keep that one or you can change it. I'll let you predict something now.
No, I will keep that and just say that CyberCube's goal and mission is to support the cyber insurance market. And we do that by hearing the themes that folks like John and Chris and Simon are thinking about in the coming year or years, and making sure that our products are fit for purpose and as ahead of them as we can be. And so updating our models and our cybersecurity hygiene signals to reflect the anticipated 2026 threat landscape, that's what we're doing throughout this year. We've heard discussions about simplifying for SME and new markets. And so localizing our solution, the financial loss modeling is already fit for purpose, but making sure that the people that need to use it can do so effectively. So new languages, new currencies, and then just really leaning into the digital supply chain that we've seen being talked about more and more and exploited more and more. So curating things like watch lists or enabling clients to identify trends with the click of a button. Those are the things that we're responding to. So I guess that's how we're responding to others' predictions, as well as our own internal research predictions.
Great. Well, I'm afraid we're coming up to time. So I'd like to begin wrapping up by thanking our panelists for such an insightful and wide-ranging discussion. Today's conversation has reinforced a clear message from the CyberCube Cyber Predictions 2026 report. Cyber risk is becoming more dynamic, more interconnected, and more strategically significant for the reinsurance sector. From evolving threat actors and AI-driven change to market conditions, the need for robust data, forward-looking models, and informed decision-making has never been greater. Thank you to everyone who participated in today's webinar and submitted questions, and to the more than 700 of you who registered for this session. A recording of today's webinar and the presentation will be available and shared with you shortly. You can also download the CyberCube 2026 Cyber Predictions Report and related content directly from our website, cybercube.com, where we regularly publish research and insight to support the insurance and reinsurance community. If you'd like to continue the conversation or learn more about how CyberCube supports insurers and reinsurers, brokers as well, in navigating the cyber risk, our team would love to hear from you and spend time with you. You can drop them an email at info@cybercube.com. On behalf of CyberCube and our panelists, thank you again for joining us today, and we look forward to continuing the conversation in 2026.